My name is Nelli Zaltsman. I'm an executive director and head of platform settlement solutions at Kinexys Digital Payments.
And where does your team sit within the broader organization?
Sure. So we are part of the JP Morgan payments business, but we are a brand dedicated to everything blockchain related at JP Morgan. I particularly focus on payments, but we have others on the team focused on digital assets and information exchange.
Okay, so the focus for this conversation is going to be around digital assets. When you think about this, when you strategize around the opportunities, what gaps in the market are you trying to address by leveraging this new technology?
Absolutely. So, from my perspective, we're really trying to leverage this technology to introduce better liquidity options into the market. So, while we ourselves do not provide the digital assets, so to speak, whether they be real world assets or others, we are very focused on how do we facilitate the market by making sure we have advanced payment rails that are well integrated with other blockchain projects, protocols, and so forth, because without payments, you're missing one half of the equation.
And when you sort of work your way through the various commercial opportunities that you could be pursuing in this space, how do you evaluate what to track? What KPIs or other benefits are you tracking to make sure this is actually delivering good value for yourselves or for your client?
Absolutely. So first and foremost, we do always want to make sure there is a value proposition to the client from using the new technology. Ultimately, it rolls up to cost savings and operational efficiency, and that can be achieved in different ways. One is for some use cases, there is an aspect of programmability which is available to clients. This is the notion that you can give us dynamic instructions that the client doesn't have to manually introduce every time, but it can be based on things like either scheduling or target balances. But when you get to transaction settlement, more sophisticated requirements like specific ways you want to pay out certain settlement transactions with certain features. And by introducing those things, clients, one, can save operationally because it's a less manual process. But two, they actually really benefit from what we call just-in-time funding of transactions. So because it's programmable, they don't have to pre-fund for certain transactions. Rather, these funds can stay in their most advantageous and productive accounts from an interest-bearing perspective and only be used if and when they're needed to for specific transactions. So clients really get the benefit of that. And lastly, what we really see by introducing new technology into the payment leg of these transactions, particularly opposite digital assets in the context of settlement, is by matching the speed and transparency of the digital asset leg by also using blockchain on the payment side, we just significantly de-risk the transaction from a settlement risk perspective.
And when you think about rolling this out or scaling new initiatives, what have been some of the biggest operational challenges or perhaps cultural challenges to embed this new technology in your existing banking or investment banking workflows?
Sure. I always think when you introduce new technology to the bank, there's a bit of a learning curve. We're obviously highly regulated. So I think step one is just familiarizing the bank with the technology and what it means, which also means separating the technology from specific use cases like associations with specific assets, which may or may not be aligned with what we're doing. So that was always step one. Step two is becoming comfortable with again, the value proposition of the technology because it is an investment. So for the firm to understand, hey, it's faster, in the long run, it will be cheaper, smarter, and potentially, frankly, more resilient because there's a lot of redundancy you can introduce using blockchain technology. It is an investment upfront for a more productive and operationally efficient future. And that is always a bit of a challenge to market as well. And then lastly, of course, is client education and client positioning. So we are historically known for positioning our payments products on blockchain as deposits. Historically, our product has been a deposit account on blockchain. And now with the token, it's a tokenized deposit and not a stable coin. And the reason we do this is because for our clients, keeping a consistent structure, both legally and from an accounting perspective, is important to the way they fold this into their work streams. And just making sure we're operating within those bounds has always been a key focus area as well.
Well, one of the products that I'm really keen to learn more about is Kinexys. Is that how you pronounce it?
Yes,
Uh,
Kinexys.
Good. Can you tell us more about that? What is that?
So Kinexys is our brand for, again, all things blockchain at JP Morgan. And again, we are divided into three segments: payments, assets, and information. For Kinexys payments, we have the blockchain deposit accounts, as well as the JPMD deposit token. And again, we're very focused on this side of the house in integrating ourselves with all kinds of digital asset initiatives, marketplaces, and so forth, where our clients may want to introduce liquidity, procure assets, and so forth. As well as, by the way, for the last 5 years, what we've been doing, which is really enhancing the traditional treasury experience for our clients. That's actually the cornerstone of what we had been doing when we initially started the product, and it's one of our strengths. On the information side, we have a platform called Link. It's actually our oldest blockchain-based in production product, and it also originated out of the payments business. It is a multi-bank, multi-institution, if you will, platform for information sharing when it comes to things like account validation in the context of payments and stuff like that that benefits the payment lifecycle. And lastly, we have Kinexys Digital Assets, which is our in-house asset tokenization platform. We have three applications on it right now. Intraday repo, which actually uses Kinexys digital payments as the payment leg. We have a digital debt service as well. It's a debt issuance application, which also uses Kinexys digital payments. And lastly, we have an up and coming use case, which we are developing called TCN, Tokenized Collateral Network, where we see the benefit of this technology in terms of collateral is being able to really rapidly deploy it, as well as pull it back when it's no longer needed in the context of, for example, margin. And that applies to both assets and cash. And we think there's a great efficiency there as well.
So thinking about the client's perspective or the beneficiary of this platform, how has the uptake and the interest been to adopt this or use this? And what are some of the outputs and benefits that they're seeing? I mean, speed or transparency or other aspects since you launched this Kinexys platform?
Absolutely. So again, I'm on the payment side, so I'll have to stick to that. But like I mentioned, when we started Kinexys Digital Payments, our core product was the blockchain deposit account. At its inception, its main value proposition was its 24/7 availability, and the system actually connects to most of our core corporate banking locations globally. So you can actually use it as a connector for your multi-country treasury. And our clients saw a lot of benefit from being able to rapidly rebalance their liquidity between jurisdictions like London to New York to Singapore, etc., near instantaneously. And then when we added programmability, obviously that became even more efficient because clients no longer had to manually deploy that. They could automate it based on target balances, schedules, and needs. So more automation, more cost savings, again, from this concept of just-in-time funding, as well as because you have the ability to more seamlessly move money around globally, less need to deploy intraday borrowing for funds availability, right? So there's a cost savings there as well. And then, as we progress into digital asset settlement use cases, we really do hope to achieve the same efficiencies for clients in that space. Again, cheaper way to settle, more transparent way to settle for digital assets, and hopefully less risky from a settlement and counterparty perspective due to the speed.
Super interesting. One aspect that keeps coming up in my research is around interoperability. How does Kinexys integrate with other blockchain-based instruments or infrastructures in order to scale and grow the reach
Yeah,
effectively?
absolutely. This is actually a key area that I focus on. When we started trying to use Kinexys digital payments for settlement, our first out-of-the-box solution was just API to API connectivity, which is still available, but it only works in certain situations for certain platforms. We're now very focused on achieving strategic relationships with interoperability providers and more automated technology. So, for example, in May, we announced a collaborative effort with Chainlink and Ondo Finance, where we actually use the Chainlink CRE product to sit between ourselves and OndoNet. And in that scenario, Chainlink CRE listens for agreed upon transaction events, which then kind of trigger certain workflows on the payment side, and in which allows us to, I like to call it, simulate DVP between two chains. So there's an agreed workflow, and that's how we're doing it. We are constantly seeking to mature our interoperability as well. So I would say that JPMD, the deposit token we issued on Base, is part of that effort. So right now it is in pilot, but that'll also be a key part of our strategy. The way I see it, kind of cycling in the client experience is we have the blockchain deposit account as kind of client home base, and it allows them to both facilitate interoperability between a number of accounts within JP Morgan, including their traditional deposit accounts, pull in liquidity programmatically as they need it, and move it around the firm, pay out in our own system if they're paying counterparties that have blockchain deposit accounts, but also use it as a home base if they kind of need to reach out into external public blockchains where we have issued deposit tokens and use them there, and have those deposit tokens that also have this seamless connectivity back into our account system. And then where we haven't issued deposit tokens, have other options such as the Chainlink-like collaboration to use your blockchain deposit accounts for settlement. So kind of fit together as one experience.
Perfect. So looking ahead then, maybe the next 12 or 24 months, can you tell us anything about your roadmap? What are some low-hanging fruit, or where do you see the biggest opportunities right now?
For us, we are really focused on introducing liquidity and partnership with the RWA markets. They're trying to grow. I think it'll be hard for them to grow without optionality from a payments perspective and liquidity perspective on the institutional side, which is where we focus on institutions and large corporates. I do think there is a really aligned objective between what we do and the work we're trying to develop in terms of easily integratable payment rails and the growth of the RWA space.
Sounds very exciting. Nelly, thank you very much for your time. Really appreciate that and your insight.
Thank you.